I'm Alison Grade, I'm the author of the Freelance Bible, and my work is all about helping freelancers and creative entrepreneurs to be the best that they can be. I talk about why do clients work with me, and I say it's because I transform creative ideas into a business reality. How I do that, what I do, can be different with every project that I do, and it's transformed through the work I've done throughout my career. But why clients work with me is always the same. And that's something that I really work hard with creative freelancers and entrepreneurs to really help them understand that you can do different things, but the reason clients will work with you is often for that same reason. So what am I going to talk to you about today? My session's called Show Me the Money, and we've got to look at it from a lot of different perspectives when we're thinking about the money for freelancers, for entrepreneurs. The first question I always ask freelancers is, what do I need to earn to live the life that I want to lead? Because this work that I do, this company that I run, has to pay my bills as well as anybody else who's on my team. So what do I need to live on? And then we can look at how does this link in with what my company, what my freelance operations look like. How does that build into the bigger picture? The next thing we'll look at is making sure we get paid. How do we set ourselves up to make sure we get paid in that timely fashion? And then finally, I'm going to look at how do I unlock my value? What is my value? Why, that question again, why are clients going to work with me? I've got a whole selection of resources for you. There's a QR code you can scan, there's a link you can pick up. So do have a look at those during the session and look at those live while you're listening to this, because that will really help. So let's get started with what do I need to live on? And the first thing that I encourage people to do is to do an individual living budget. What are all the costs that you need to live the life that you want to lead? And we're not talking about how frugal can I be, how little can I spend. It's not about, yeah, I really can eat baked beans on toast every day. It's living the life that you want to lead, because we want to be healthy, happy freelancers and entrepreneurs running our businesses, not running on empty. So what do I need to live on? And we've got to remember then that what we need to live on, that is money we've earned after we've paid our taxes. So if we're a freelancer, if we're a sole trader, we need to add back in the tax and national insurance. If we're an entrepreneur, we're paying ourselves through payroll, again, adding that back in, the taxes and the national insurance. So what do I need to live on? And that allows us to calculate, if you like, our annual turnover, the total amount that we need to bill for our services across the year. And that can inform what we need to charge, but it doesn't tell us our value. So when we're drilling down into what do we need to live on, we're looking at our household costs. What's our mortgage? What's our rent? Our utilities, our council tax, all of those things. We want to look at our travel and transport. If we're running a car, a bicycle, a motorbike, whatever it is, public transport, bus passes, train travel, all of that. What does that cost us? What about our personal expenditure? And this is a place that can be really hard to estimate. How much do we spend on groceries, entertaining, going out, holidays, gifts, all of those things? And I'm really conscious that the last few years there's been so much turmoil, but these things have changed a lot. So really starting to think, well, what does that look like going forwards in the months and years ahead? What about financial products? Do we have savings that we want to put aside for each month? Perhaps we've got credit card bills to pay, loans to pay off. Those need to be factored in as well. So add those into your spreadsheet. And any other costs you have, childcare costs, medical costs, other costs that haven't come up already. So really drilling down into as much detail as possible. And if you're just starting out, maybe you're starting out as a freelancer, you might need to buy some things up front to be able to deliver your freelancer services. I call them the tools of the trade. So do you need a computer? Do you have a computer? Can it deliver? Does your mobile phone have enough battery? Do you need to get some business cards printed? Do you need to pay for a website? All of those kind of things. Probably need to pay for those up front out of your own money before you start earning. So you might need to factor those in. So really thinking about how much do you need to live on over the course of a year. So adding it up over the year, and you can look at how much that is monthly. Once you've calculated your individual living budget for the year, and particularly if you're a freelancer, you want to think about, well, how do I manage my money? And as a freelancer, I don't want to have all the money coming in from all of my work and all of my personal expenditure all being muddled into the same bank account. So what I like to do is to have 3 separate bank accounts: a business current account, a business savings account, and a personal current account. So all of the work that I do, all of the invoices I send, all of the expenditure that I have related to running my freelancing operations all go through my business current account. So the money comes into there, the expenses go out of there. When I get paid by a company, I put a proportion of tax and national insurance into the savings account. So that's put away, I don't spend it. HMRC is not very friendly if I spend it and I don't have the money. So really important, put the money away as it comes in. It doesn't half mount up really quickly, and you don't want a nasty surprise at the end of the year. So those are your 2 business accounts, and then your personal account is where all of your individual living budget costs come out of. So you'll be paying yourself from your business account into your current account. So all of your rent and your outgoings go through that. And that allows you to keep everything neat and tidy, so that at the end of the year, if you're doing your tax return, all of your business expenditure and income is all in one account. So if you've got a really bad online shopping habit, now I'm completely guilty of that, what I really try and do is, if I'm buying something for work, I'll pay for it out of my business account. If I'm buying something for the kids, then I'll pay for that out of my personal account, so it doesn't all get into a muddle and I've got to go through all of the receipts at the end of the year. So keeping that separate and setting up good practice from day one. And I know that lots of creative freelancers will often be, sometimes they'll be self-employed invoicing, sometimes they might be through the payroll. So again, keeping all of your money that's coming in one account can be really valuable. So even if you're paid through the payroll, if you're doing a bit of freelance, self-employed work and payroll work, having it all coming into one account and then noting, well, I've paid tax on that and I owe tax on that, that can be a really good way to keep everything and all your records together. Because ultimately you are one person as far as HMRC is concerned, so any money you get paid, whether that's through the payroll or through invoicing, is all allocated to you, and you have your taxes come out in the wash between all of that. So keeping those records all together is really valuable. And there are, as I said, the resources available. There's a specific download on my website which gives you really lots of detail around how the tax return works for a self-employed person, with lots of examples and case studies. Now that we've looked at how much you need to live on as a freelancer, as an individual, really, as an entrepreneur, we want to look at how does that link in to what I'm doing in my work. How does that work? So how do we build that up into a picture of, well, what sort of work is the company going to be doing? How are we going to be doing it? What sort of work am I going to be doing as a freelancer? So the next thing I tend to look at is project budgets. How do these work? Because so much of our freelance work is project by project, or creative entrepreneurs running project by project. I'm making a film, I'm delivering an exhibition, I'm running an event, I'm running a workshop program, whatever it might be. So if we can start to look at, well, how do I put together a budget for my project? I can look at, well, how many projects then am I going to do in the year, and how is that going to magically pay me everything I need to live on and the team that's going to be around me to deliver it if I've got a team. So those project budgets are really important. So we want to start with, okay, first of all, what is the scope of the project? What am I doing? Where am I doing? Why am I doing it? Why is it important? So scoping out the project and then thinking, well, before I start putting money against that, how long is it going to take me to make this, to deliver this? When am I going to do it? And once I've got a schedule together, I can then start to look at the resources I need. Who do I need? What equipment do I need? But that schedule, starting with that schedule, is really important because that allows us to outline what is needed when, and from that we can go, okay, well, I need those people for those number of days or weeks or whatever it is, and then I need the camera people to come in on this day or however many days. It gives you a picture of what you're trying to do, and it helps you go down into as much detail as possible. And it really is, when we're scoping out projects and putting budgets together, the detail is really important. You want to think through all of those eventualities so that you cost the project up properly. Let me give you an example of a project budget that I might put together. So I deliver a lot of different workshops. So I might be planning a workshop series. So what I'm going to look at is, first of all, I'm going to look at the schedule and go, well, how many workshops do I need to deliver in this series? Is it a 5-part series? Is it a 10-part series? Over what period of time will I deliver it? So I'll look at that and I'll put together, I'll start at the delivery end on the schedule and go, well, this client's going to want it before Christmas. So let's think that probably not going to do too much in the latter half of December, too close to Christmas. So maybe we'll do it last week of November, first week of December. So I've got a timeline of when I'm going to deliver. And if I've got to find, say, the participants to come on this workshop, when do I need to have told everybody that they're coming on the course? Well, ideally 2 weeks before, possibly something like that. At which point I can then go, okay, well, that's early to mid-November. So when do I need to start marketing it? How long do I need to market it? How long do I need to review applications? Does anyone else need to do that? So I'm starting to build up a timeline of how long it's going to take to deliver the entire workshop series. And then I can go, okay, well, how many people do I need? How many days a week do I need of a project manager? How much of my time is it going to take? What other resources? If I'm delivering in person, what training room am I going to use? I'm a big fan of giving people refreshments on training courses, so teas, coffees, lunches. I like to make it a pleasant environment. So starting to think about all of those aspects, what does that look like? Will I be helping people with travel to get to the location? All of those questions. Is there evaluation and wrap up to do? Once I've got that plan together, I can start to look at, okay, putting some costs against all of those different activities. So I'm breaking down what I'm planning to do into a series of lots of different activities that really helps me to work out the costs for that project so I can put that together. Once I've got my project budget, if I want to build that into what is the company doing, what else is going on, then I want to start thinking about cash flow forecasting, and that's when I layer up all the different projects that are in the plan, in the pipeline, things that I'd like to be doing, and start to look at how does that look across a whole year. And a cash flow forecast includes, well, what do I need to set up? If I'm just starting this organisation, are there setup costs? If I'm moving into a new area, maybe there's some things I need to set up, some equipment I need to buy, things like that. So any setup costs. And then I'm looking at my expenditure, my running costs. What does it cost for me to run my organisation, whether that's a company or whether that's my freelancing operations? Within that expenditure, we can split it into fixed costs and variable costs. So your fixed costs are costs that you incur whether you're being paid for work or not, whether you're doing any work. So an office that we rent, that I might rent, that would be a fixed cost because I'm paying for the office whether I've got any clients or not. But a freelancer I bring in to help support on training, I'm probably only going to bring in and pay for once I have the training booked in. And variable costs are the costs that are incurred as and when you spend money on projects that are funded. So if I've got a freelancer coming in to deliver the training with me, I'll only pay for them because I know I've got that money coming in. The other part of the cash flow is about income, what's going to come in, and importantly when, because the cash flow is going to tell us, do we have enough money to pay all the bills to keep trading? So if I give a simple example of a coffee shop, when we're thinking about, if I'm thinking about opening a coffee shop, then the first thing I'm going to do is need some premises. So I'm going to need the premises, I need to take a lease. That's going to be my fixed cost, running the paying for the lease on the shop. I'm going to need to buy a whole load of tables and chairs and coffee machines and things like that. Those are all my setup costs to get started. But my variable costs might be things like milk, because I'm only going to use the milk as and when I sell a cup of coffee. So different ways that we can look at managing our money and thinking, well, do I need to buy all of these fixed costs up front, or can I buy things as and when I need them for projects? And the role of the cash flow is that it provides you with really important information on the viability of your business, your operations. It shows you the relationship between income and expenditure on a monthly basis, and it shows that cash left at the end of the month after all the sales are received and the expenses are paid. And it shows your cumulative cash position. So, effectively what's in the bank. So just like when you have your own bank account, if you have £100 come in at the beginning of the month and you spend £50 that month, you've got £50 left over. You can take that forwards to the next month. And then if you get another £100 in, you've got £150 in your account, and so on and so forth. So that's all the cash flow is doing. But what you're doing is looking at it in a projecting forwards. What if I get this work in? What does that look like? How often or when are my clients going to be paying me? So if I'm delivering that workshop series that I just talked about in November and December, when am I going to get the payments in from the client to enable me to pay those members of the team? What does that look like? So that's what we're trying to do. I do the cash flow on an Excel or a spreadsheet, and that's what I'm going to talk you through now. The important thing is you make that cash flow personal to your business and your needs. This is a document that needs to work for you and talks about what your business spends money on and what your business gets money in from. The first part of the cash flow you'll see is that top row where there's 12 months of the year and a setup month at the beginning. So you can decide which month you start your cash flow in. Some people like to start it, it's September now, so maybe I'd start it in October because I'm planning my cash flow now. Other people might say, well, I'd do it on my financial year for your business. So it's whatever makes sense to you, but you've got 12 months to play with, so 1 month for each month of the year. So that's the first thing we're going to look at, and then we're going to look at all the money coming in. What do you expect to come in? What projects have you got coming up? What work have you got coming up? How much might those projects be worth? When might the money land? That's really important. So the top part of that spreadsheet just looks at all the money coming in, and it's up to you to populate it line by line with project A, project B, project C. And if project A is worth, say, £10,000 across the year, and you're going to do it in the next 3 months, then you want to think, well, is the company going to pay me in all of the £10,000 at the end, all at the beginning, in stages? So you just pop it in month by month, and the cash flow will do the heavy lifting and will add up across that project. So on the far right of the spreadsheet, you'll see it will give you the total across that project, and then you get the totals month by month of the money coming in. So that's the money coming in, and then we want to do the same with the expenditure. What am I going to be spending money on? Well, I need to pay myself, so we can put in our own individual living budget. How much do I need to be taking out of the company every month? Who else is in the team? What else are we spending money on? We might have online Zoom or other types of accounts. We might have spreadsheet software. We might have marketing costs. We might have all sorts of different types of software costs, all different things that we might spend on. We might need to go and hire venues. We might need other freelancers. We might need some subsistence. We might need some travel costs. Whatever your business needs, you're putting that into the expenditure. And you'll probably find you have some fixed costs, maybe your office costs, things that you spend regularly that aren't attributable directly to projects, and other things whereby that workshop series, I need an extra trainer to come in on the delivery day. So those will be specific to that project and that delivery. So you can start to fill in all of that detail. And then you add up all of your expenditure. And again, the spreadsheet will tell you what it is across the row for the year, but importantly also what you're spending per month. And then the next stage is the really important stage, because the cash flow will then calculate your revenues minus your expenditure for each month. Once we've got the revenues minus expenditure calculated on an individual monthly basis, we need to look at that in the bigger picture. So how does that link to, well, what do we have in the bank already? And then carrying that through. So whatever we've spent or brought in that month, how that aligns to what was in the account already, and calculating that. So the important thing is that very bottom line of the cash flow. It absolutely is crucial. It needs to be positive. If it's negative, i.e. less than zero, you've run out of money. You can't move forwards. You can't pay those bills. It's a really big issue. So if when you're preparing your cash flow forecast and when it's finished, because as you're doing it along the way, the chances are it'll pop around all over the place, but once you've really got to a place where you think it's finished, if that bottom line has negative numbers on it, it's a real issue, and you're going to have to look at, can you reorganize your operations, your cash flow planning, all of that to make it positive. If you go into the resources, you'll see on the Padlet that there is a cash flow template. Open that up and you'll see that there are 3 tabs on there. One which is a blank cash flow template for you to fill in and personalize to your business, but also a not working cash flow forecast and a working cash flow forecast. So if you look at the not working one, you'll see at the bottom I've highlighted in months 3, it's months 3 and month 5, you'll see that there's negative numbers in there. It's gone into the red. That business is going to stop dead in the tracks in month 3. It can't pay the bills. So what does it need to do? It needs to look at how can it reorganize its cash flow. So they looked at it. If you look at the working spreadsheet, you'll see that they reorganized and talked to their clients and changed how the payments were going to work on some of their upcoming projects to ensure that they had the cash flow to be able to deliver them. So those are questions you want to ask. In a previous business I owned, we had a big capital expenditure payment that we needed to pay. I was running a motorbike training school. We taught women how to ride motorbikes, and we needed to buy the motorbikes up front, so we had them to deliver the training. So I didn't have the £30,000 to buy the motorbikes. What I did was I bought them on hire purchase, and I paid for them monthly as the money came in. So different ways to look at how you can rethink your cash flow to make it work. But it helps you to highlight where the cash crunch is, what that might look like, how are you going to manage it. The cash flow projection really helps us to plan ahead and think about the work that we've got coming in, how we're going to organise our time, how the money's going to work. That's all our future planning, our forecasting. The big question is getting paid. How do we ensure as a freelancer, as a business, that we get paid in a timely fashion? And I think there's lots of things that I can do as that freelancer, as that entrepreneur, to really help that process along. The first thing is always about sorting the paperwork out before you start the work. When I'm starting a new project with a new client, first time I've worked with them, there's often going to be a lot of paperwork I need to fill in. The bigger the company, the more paperwork I'm going to have to fill in. If I don't fill that paperwork in a timely fashion, it's boring. Let's not go over it. It's boring paperwork. I don't want to fill it in. I'd much rather do the project. That's what I've been asked to do. If I don't fill in the paperwork, I can't get into their systems. They can't possibly pay me. So get the paperwork in a timely fashion. And make sure also you ask yourself, is the person who is hiring me, who I'm talking to, have the authority to order this work? Do I really believe that they do? Does it sound like they do? Because if they don't have the authority to order the work, you're not going to get paid because they don't have the authority to spend the money. So once you've established in your mind that the person has the authority to order this work from you, do also make sure you get it in writing. Chances are they'll send either a contract or a purchase order, or at the very least an email. If the client doesn't send you that email, then by all means take the initiative, write back, "Dear client, we had that further to our conversation. I'm just confirming that you have booked me to do this work at this price, to deliver this, da 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 da," whatever that entails. So you've got it in writing. And rather than saying, "Please write back and confirm this," just say, "Unless I hear otherwise, I will assume it is confirmed," because you want to take those grey bits out of that. What if it goes into their spam? What if they don't reply? All of that kind of thing. So you've got it in writing, and on top of getting the work in writing, there is no shame or embarrassment or anything to saying, what is the payment schedule? When am I going to get paid? So you want to know two things. First of all, what monies do I need at what point to deliver this project? So if I'm doing a film project, say with a client, and I've got to hire in a camera team, I'm probably going to have to pay for that up front and confirm things before the main part of the project is delivered. So I'm probably going to want to get a chunk of money up front so I have cash flow. So there's no risk to me not paying my subcontractor. So getting some money up front, also understanding that you might, if the project's going on over a 6-month period, you probably don't want to wait 6 months, then invoice for the full amount. So what does that look like? Stage payments, how does that look? What do you want to do? I'll often put that into the project plan, the proposal that I send to a client. Once you've established roughly what your payment schedule is for a project, my top tip, and I've been on both sides of the coin with this one, at the client end and at the supplier end, is if you're setting up a project, say it's £10,000 and you've got 4 stage payments, it's really, really tempting to go 4 payments of £2,500. But those invoices can get a bit confused. Invoices 2 and 3 might come up really similar times. So you think accounts have paid invoice 2, but they think they've paid invoice 3. And when they're all for the same amount of money, nobody knows what's going on and it gets in a muddle. So even if you vary them by £5 or £10, it means that the accounts team will say, "We've paid you £2,490, and everybody knows exactly which invoice they're talking about. So really top tip, if you can avoid making invoices for exactly the same amount of money, it makes life so much easier. And accountants have to pay by the letter and by the number. So those £5 or £10 difference probably won't affect your cash flow, but will speed up any chasing of payments, and everyone will know which invoice everybody is talking about. "Oh no, we don't have one for 2,490. We've only got one for 2,510. Ah, right, I know where I stand." So that is really, really helpful, and I've definitely learned it the hard way, so I'm sharing this today. And then the final thing about making sure you get paid is really understanding, well, what is the company's payment processes? So companies will often have either a weekly, a fortnightly, or a monthly payment run, and they'll have dates in the month whereby all invoices have to be signed off and with accounts ready to get paid. So if you miss the date, you're going to get paid on the next run. No two ways about it. So if you understand what their systems are, when you need to get paperwork in, that will help you understand when and how you might get paid. Now, I'm giving you the broader picture here for the much larger companies where there's lots more people and systems and processes in place, because if you can set yourself up well for those, working with small businesses where you're already dealing with the managing director, they're probably paying you from the bank account using their own mobile phone. That's much easier to keep on top of, so and fast track things through if it gets a little bit astray. So really understanding how the company is working will help you to make sure you will get paid when you're expecting to. So talking about getting paid, in order to get paid, we're going to have to send in an invoice. And an invoice is a legally binding document. Again, in the resources, there's an invoice template for you to follow. There's a specific set of information that has to be on every single invoice. So either create one in Excel's probably preferable to Word, but equally lots of accounting software now will have templates where you can add your logo and a lot of the required information will be on there. Companies will send back invoices that are not correctly made out. Again, you really don't want that to happen. They've sent it back, then you have to go to the back of the queue, and only when you send it in again in its correct format will it go in the queue to get paid. So you really want to make sure that every invoice you send in is made out with all of the information that is required. Once we've sent in our invoice, I like to track and log the invoices that I send in, and I keep a little spreadsheet of this is the work that's going on. And I will start with, if I've just had a speculative conversation with a client, but maybe I've sent in a proposal or a quote, I'll put that on my invoice tracker and I'll have a column that says possible, that might turn into work. Then when it's confirmed, I'll move it across a column into the to invoice column, so I know that's confirmed income. When I've invoiced, I'll move it across to the next column, and I said it's invoiced, and then when it's paid, I'll move it across again. So it's just a tally for me of where all my projects are at. It's also a really useful little sales log of different conversations that are going on. All those possible ones, you can come back to it and go, oh yes, I haven't heard from them. What are they up to? Let me give them a tickle. So it works as a little bit of a sales log, but also you can see things moving through. And then from that, especially if you're freelance, you can then make some ballpark calculations on how much tax and national insurance is due. So you might not calculate in all the possible work, but if you know you're about to invoice it, you have invoiced it and you have been paid it, that's a whole lump you can add up and then do a rough calculation to work out how much money do you need in your tax account, how much do you need to be putting aside. The chances are you may well be using online software that comes with your bank account or something to track payments and link to open banking and all of those kind of things, and that's really helpful. But I still find this very simple spreadsheet where I'm tracking who I'm talking to and where the money's got to in the system really, really useful on a day-to-day basis without having to go in and look at what's in the software basically. The final thing I want to talk about in terms of getting paid is troubleshooting payments. I've already said, you know, every company's got its own system and it's really going to help you to be familiar with that. So get yourself familiar with the company system. Then if you're finding that the money's not coming in on time, you know, it's a polite nudge to the accounts team, the finance team. You know, I always start with an accounts team or a finance team rather than the client. Where's my invoice in the system? Accounts love solving problems. So ask them a question, where's my invoice in the system? They'll go and look it up. If they're able to find it, they can advise you, well, it's at this stage, it'll get paid here. They might say, oh, it hasn't been signed off by so-and-so, your client. So then they might chase it, you might chase it. If it's not in the system, then you're going to go back to your client and go, I've sent this invoice in, where's it got to? But hopefully you'll be able to sort out the conversation with accounts and not have to trouble your client, because last thing I want to do is be bugging my client who I want to have a really professional working relationship with, do all these creative projects. I don't want the money conversations with them, so don't start with them. Start with the accounts department. If you're still not getting paid by the client, it's time to send in a firm reminder to both your client and to the finance department. You're going to be explaining that the invoice is now overdue for no legitimate reason, and if they don't settle within a specific period, something like 14 days, you will levy late payment charges in accordance with your terms and conditions of business. You do have to have terms and conditions of business that state this, so fingers crossed you do. If you don't, there are plenty of organisations that can support you with terms and conditions of business. You've got places like IPSI and the FSB, Federation of Small Businesses, so lots of places that can support you. And then if your letter is still unpaid after this time, then you're sending in a final demand and you're writing again to express your disappointment that they haven't paid, outline the amount owing, any late payments, interest levied, and again, request payment within a specified period, again, such as 14 days, once more in line with your terms and conditions. And follow up each of these stages with a phone call. As a last resort, you might need to take legal advice on how to claim an unpaid debt. And I mean, I've been a freelancer and in business over many years now, and I have had to do this once in my entire career. So really, it's about taking ownership and responsibility from your end at the beginning, understanding those systems, and then really following through and being firm and polite and methodical and really rigorous in your follow-up. If you get a bit scattergun and you leave it an extra week and stuff, it will all slip. So really keeping on top of it. Now that we've looked at getting paid, the next and final topic I want to cover is unlocking your value. And that's something that freelancers, entrepreneurs, particularly in creative industries, can often really struggle with, understanding the value that they deliver for their client. What does that look like? And I've got different ways of looking at how we start to think about our value. What does that look like? If I start with my freelancer hat on and I just think about, okay, if I need to earn £30,000 a year, divide that by my estimated rate of £200 a day, I would need to work 150 paid days per year. I could look at that on a weekly basis. £30,000 divided by £1,000 a week, 30 weeks per year. So that gives me a sense of how much paid work I need to do, because I'm going to have lots of other work I need to do, whether I'm a freelancer, whether I'm running a business, to work on my business, to set up projects, to set up meetings, to do the background administration of running the company, running my freelancing operation. So it's very unlikely that I can get paid or have the capacity to be paid 365 days a year. The other way to look at it, if you've got no idea what your estimated rate might be, you can say, well, actually, what do I know? Well, I know that I need to earn £30,000 a year. Okay, so I know I need to earn that. I also have one other fixed thing. There's only 365 days in a year, so I can't work more than 365 days a year. But let's say I work 48 weeks, 240 days. So let's say, well, that's the maximum I could work, because the chances are Christmas is really quiet for 2 weeks, Easter's quite a week, and let's say I take another week off in the summer. So let's say there's 48 weeks available across the year where I could work. How many of those might be paid days, paid weeks? So 48 weeks, let's make the numbers really easy. Let's start by looking at what would my rate need to be if I worked 24 weeks a year, 120 days, so 50% of the time. So I take that £30,000 and I divide it by 24 weeks, 120 days. The amount I'd need to be paid is £1,250 a week, or £250 a day. So those 24 weeks working paid work 50% of the time takes me to 1,250. So you can see that it's not far off those 30 weeks. So you want to be looking at, when you're looking at your finances, starting to do some of these calculations. What does that mean my rate is? How does that work? And if I'm budgeting for projects within a wider company, again, I want to make sure that I'm not assuming that every moment of my time is allocated to specific client projects. I need it to stretch a little bit across to allow me to do the administration of the business, or provide some extra costs within my budget to allow company administration time, things like that. So that's a start of how we're going to look at our value. Equally, working out our value, it's a bit of a dark art as well as a science. We've got to look at lots of different information. We need to do some research. Partly we need to think about, well, how much experience do I have in this role? Now, I worked in film and TV for quite a few years, but it took me a good dozen years to get to the point of being a producer. So I was new being a producer, so I was only just started in that role, even though I'd been in the industry for a dozen years. So I was at the lower end of a producer's rate. As I got more experienced as a producer, the rate increased. So at different stages in our career, we can still have bands and rate bands where we can charge different amounts. So understanding what's right for that role and how much experience do I have in that role. So starting to think about how much experience we have. Want to do some benchmarking. What happens in my sector? Are there any resources that I can find out about? Are there guilds, organisations, unions, anyone with recommended rate cards, information to help me understand what is paid in my sector? What about published opportunities? If you see shout outs for freelancer gigs, even permanent jobs, looking at what that looks like, building up a picture of what is being paid for those rates. If you see a permanent role, just remember that that company's not only got to pay that person the salary that they've advertised, but they've also probably got to give them a desk, a computer, a phone. They've got to pay the employer's national insurance. So you can probably bump up about 20-25% what it's going to cost that company when you're comparing a permanent position with maybe a freelancer opportunity. And also, asking people is a really good way to benchmark. Now, when I say asking people, I do not mean, excuse me, what do you get paid? What I mean is, ask someone in your network, ask someone who you trust, ask someone who understands the work that you do and say to them, well, I'm looking at pitching in to deliver this workshop series for this client, and I was thinking that I could charge my time at this sort of rate. Do you think that would work? Do you think that's appropriate? So you're asking for their advice about what you're doing. You're not asking them for personal information. It doesn't go very well when you ask people for direct information like that. They sort of tend to stop talking to you. The other things you want to consider is, what industry sector are you working in? Are you working for a big commercial organisation, for a not-for-profit? Are you teaching? Are you doing? Is it a large company? Is it a small company? Because these things can affect the different rates and the different prices that might be paid. If I'm teaching about being a producer in film and TV, that's very different to being a producer. I'd get a teaching rate or a producing rate. If I'm working for a big blue chip company, they may have more money to spend than a small not-for-profit. So I might have different rates. Again, also I want to think about, who is the audience for my work? Am I doing commission work where it's all fully funded, or is it speculative pitch work? So even within one company, I might have different rates. The company says, we're doing this pitch, we really want to win this big bit of business, we're putting our own money in, we can only give you a little bit, but we promise to take you on for that project should it get commissioned. So you might have different rates for that. I would be aware of that pitch-only client, that client that gets you in only to do the pitches and doesn't take you on for the commission work. Either they're taking advantage of you and they don't want you for the real work when it comes in, or they're not doing very well because nothing's converting to pitches. So just be wary of that. But using a set of tools to look at what you're worth in different ways and building up that big picture of, what is my value in the marketplace? What might it look like? What are people paying? The key takeaway when you're starting to think about your value and your rate is not to assume you have just one rate, but understanding that different clients, different projects, different sectors, different things will be different rates. So you're always looking to read the situation and try and work out what is right in that context for me right now. We've looked in different ways of the research and the tools that you can use to think about what your value is. The important question to also ask yourself is, how am I adding value to this client? Because there are different ways that you can add value to a client. You can fulfill a need for a client. I'm crewing up for a feature film, we've got a green light, we need crew, I'm fulfilling a need. But we could also be developing new opportunities for a client. I get hired to be a consultant to research a new market area for a client. I'm adding value to that client. They don't know my sector. They don't have my knowledge. I'm bringing that in. So I'm developing new opportunities, new sales opportunities for them. It could be that I'm brought in, the work that I do is absolutely about increasing sales for the client. Or it could be that I'm brought in to save money on the bottom line. So maybe I create some training resources that allow the clients to have all of their team do the training remotely rather than getting 100 people in a room somewhere for a day and those costs. So there's different ways that I can add value to my clients, and that's much more than the price that I charge, than trading time for money. So I really want to think about, what's my secret sauce? What's the value I'm delivering? Why is this client needing my services? How do I add value? Because in that way I can start to think about, well, can I close this deal with the client without talking about price? Because if I can get into a situation where I'm talking to the client, we're so much on the same page, they can so see how I'm going to add value to them, price goes out the window, because they know it's a no-brainer to have me and my company, my freelancing services around them, supporting them. So always asking myself, how do I add value? That's what's going to make a difference. The other thing to understand and think about is that relationship between price and demand. So there's a simple graph here where you can see that there's price on the y-axis, demand on the x-axis, and that diagonal line is you and your work. And the interesting thing is you earn the same along the line. So when the price is high, demand's low. But when price is low, demand is high. So what does that tell you? If demand is really, really high, you've got work coming out of your ears, put your prices up. You earn the same along the line. So if you put your prices up, you build capacity into the system. So understanding that, and I see so many times that a creative will put up their prices and demand will stay the same. They're pricing below the line. There's still scope to put their prices up before clients will vote with their feet. And it's really scary thinking about putting your prices up, because you think, oh my goodness, I'm going to put my prices up, I'm going to lose all of these clients. Well, it's quite an organic process that we go through as business owners, as freelancers throughout our careers. When we first start out, there's people who really want to hire us because we're keen, we're hungry, and we're not very expensive. And those clients will probably only ever want people at that level. So I'll get my experience from them. Trying to get them to grow with me, to put their prices up with me, probably isn't going to work. So I'm going to grow out of some clients, but that also means I'm going to grow into new ones. And it's a process that happens at all stages of our careers, whether we're freelancers, whether we're entrepreneurs. As we grow our businesses, there are some clients that we grow out of. They're the small budget clients. We don't want to work on projects that are £5,000 anymore. We only do 50 grand plus projects, whatever that looks like. So understanding that relationship between price and demand allows us to see when we want to put our prices up and what does that look like. And it's really easy for clients. We go in with a pitch. It's really easy for a client to say to us, oh, no, I'm sorry, we don't have the money for that. And when we think about overpricing, we can be terrified that we're overpricing. Client says, oh, I don't have the money for that. But I always challenge people to say, well, do they really not have the money for that? Or have I not landed my pitch correctly? Do they really understand the value that I'm bringing? Have I landed that? If my proposals aren't converting, if I'm not getting beyond the meetings, things like that, is it about the price? Because it's really easy. Clients will always just go, oh, sorry, we don't have the money for that. It's just an easy excuse. But is it really about the money? Or am I not landing? Do they not understand the value that I can deliver? So asking yourselves those questions. And again, that underpricing piece, if I'm underpricing, the signs are there. I've got work coming out of my ears. It's time to think about putting my prices up. When I am in a room pitching to a client, I always like to do that sharp intake of breath test. That's what I call it. And that's when the client asks me, so Alison, how much is this going to cost? And I pitch them a number and I'm listening out for that sharp intake of breath, because that tells me that I've pitched it well. I've pitched it in a slightly stretchy place. They've heard me. I've done a really convincing pitch. I'm a specialist freelancer. I'm a specialist entrepreneur. I've got really good skills. I've really nailed how I'm going to add value to them. And they've gone, oh, we really want it, but it's a bit pricey. There's room for negotiation. And that's really important, because if the client says to me, oh yeah, that's fine, and I know that I've left money on the table. If the client goes, oh yeah, that price is fine, they've agreed too quickly and I've underpriced the work. So I take that away as learning. I think next time, client like that, this client, price is going to go up a bit. I'm just always listening out for that sharp intake of breath. How do I put my prices up? I get asked that a lot, and you have to commit to putting your prices up. So you've got to make a decision that you are ready and you want to put your prices up. How and when you do that with different clients, that's up to you, but you put that into the plan. You might say all new clients are going to be at the new price. You might say on January the 1st, all prices are going up. Whatever way you want to enact it, you work out your strategy, then you have to follow through, put your prices up. And there's only two things that can happen. The client will agree, happy days, let's crack on, let's keep working together. The challenge comes when the client doesn't agree. What do you do? Well, you've got two choices. You can carry on as before, or you can walk away. Now, choosing to walk away is absolutely a valid decision. You've got to know that that is a possibility when you walk into the room, when you open up that conversation. If you decide to carry on as before, that's often the start of the end of that relationship with the client, because you know that other clients are paying more, you're going to get resentful, you've asked for more money, it's just not in a great place. So once you've decided to put your prices up, you want to follow through and you want to be clear about what your decision is going to be if that client says no before you go into the conversation. I've thrown a lot at you in this session, lots about the money, the numbers, the spreadsheets. It's a lot to digest. The resources are there to help you. Ultimately, for any freelancer and any entrepreneur, you've got to understand the money. Cash is king. If you run out of money, you're dead in the water. So understand the money, know your value, but ultimately it's about that customer-focused solution. Your value is about how you sell that into your client. Where is that opportunity? And the key thing for me with any freelancer, any entrepreneur, is being open for business, looking at where those opportunities are. Thank you very much. I'm Alison Grade. If you want to know more about the Freelance Bible, follow me on socials. There's lots of details available as well.